what's up, everybody? It is Wednesday, December 2nd. First, I want to thank everybody who left very nice comments about the birth of my granddaughter. If you missed it yesterday, I became a grandpa for the first time. So my granddaughter was born on Monday, November 30th, Sophia Norman. So thank you, everybody who left those very nice comments. I really appreciate it. All right, let's talk about what's going on a little bit in the market. So same thing, folks. Listen, I know this might get boring day in and day out, and a lot of people are looking at this market and they're saying, oh, it's detached from reality. And I guess in a sense, it's fair to say that because, you know, the economy is not equal for everybody. The stock market looks at corporate profits. And even that, we can say, you know, there's definitely a division between large cap and well-situated, economically situated companies that are advantageously, affected by the COVID situation and the virus. But the bottom line, what I look at are the fiscal flows, and they are at record levels. They continue to rise. I know I say this every single day, but that's the reality of the situation right now. I mean, if you're not looking at this stuff, and I know that most people don't, I'm really the only one who focuses in on these daily fiscal flows and the trends of these flows. You know, I've said it so many times, there's a lot of MMT academics out there. There are a lot of traders who are also economists. They don't look at this stuff. None of them look at this stuff. So this is the core of the approach, and it's I wouldn't even say it's unique. It's really the information you need to have in order to make an assessment about basic conditions of the economy. You know, people say to me, like, you can't predict the stock market, you can't predict financial markets. I don't try to do that. What I try to do is determine basic conditions, basic economic conditions, and what they're likely to be going forward. And once I can determine that, I can strategize. I can put together a strategy. So when you have these enormous fiscal flows being pumped into the economy, I mean, we see it. We see it in aggregate income. I mean, you just saw it recently in online sales hit a record. And that's, you know, amid everything that's going on with people out of work and the rest of the impairment to the economy. This is all a function of these fiscal flows. So that just continues to go up, you know, and I've been talking recently about corporation income tax flows because that's a good barometer of what's happening with corporate profits. And, you know, I've been telling you that came down a little bit, nothing severe. It leveled out. We're still up year over year, and now it even appears like it's starting to move back up again. The last 2 days, I have seen an increase in daily corporation income tax flows relative to last year. So, you know, it flattened out, and now it's starting to pick up once again. Now, you look at sentiment, and of course, if you looked solely at sentiment, you would say, hey man, this thing is ready for a big time correction. I mean, I would not argue with that. The only thing is, you know, sentiment is one thing. These flows are so powerful, they can continue to push the market and drive sentiment to very, very extreme levels. So as a timing mechanism, if you were looking to, you know, go short the market, let's say, sentiment has not necessarily this year been a very helpful thing, just because the flows have been so powerful. What else? The dollar, you know, I've been saying this for I don't know how long. I mean, at some point, maybe we'll get to a different reality when it comes to the dollar. I mean, we saw this back in the Clinton years when, he engineered a budget surplus and we started to see a narrowing of the deficit, and eventually we went into surplus from like 1997 to 2000, and the dollar went on a very powerful and sustained bull run. But right now, with the amount of fiscal support and the deficit and the trade deficit, I mean, the dollar's fundamentals are bearish. I've been telling you, sell the rallies in the dollar, sell the rallies in the dollar. And that's been a strategy that has worked because the underlying fundamentals are bearish. And I think in yesterday's video I said, they're not super bearish because we still have monetary policy that is favorable to the dollar. Now, a lot of people don't understand that. They think like low interest rates and asset purchases are bearish for the currency, but they're not. I mean, they remove income, they're deflationary, and that is reflected, those policies are reflected in a higher exchange rate. That's why the yen, with all the massive asset purchases, with negative interest rates by the Bank of Japan, the yen is very, very strong. All right? If what everybody thought was true, the yen would be tanking right now, but it's not. It's actually been very strong. Oil, the weekly EIA petroleum status report came out today. Now, there was a pretty sharp dip in gasoline demand. We saw it already now 3 weeks in a row. Gasoline demand down. It is now down at the lowest level in 6 months. Some of that is seasonal, okay? But it is down about 10% year over year. That's a pretty significant drop. So I think we're going to see that start to pick up. I think gasoline demand reflects the same thing I have been seeing in corporation income tax flows over the last, couple of weeks, that they softened up a little bit. But if these tax flows are telling me anything, it looks like things are starting to pick up once again. Crude inventories built up. They were down slightly, but gasoline and distillate inventories were up. So a little bit negative trends there, but we saw some really big increases in crude exports and refined product exports. Today I sent out, I send this out every week. If you want to get a copy of the EIA analysis, you know what to do. Go to my website, sign up for a 30-day free trial of MMT Trader. The 30-day free trial may be ending. One more thing. Hey, my new podcast is out today. The link is right here in the description below. I talk about BlackRock now going into the White House, replacing Goldman Sachs, which historically Goldman Sachs has populated its people into the White House and into policy level. We got BlackRock now. Talk about Biden's economic team, and I talk about some of my floor trading history and past. It's a good one. Go check it out. All right, everybody. See you tomorrow. Bye-bye.